Hey traders, this is Blake Morrow with Trader Summit, and with me once again, and it's been a long time, I have Giles Coghlan. He is the Chief Market Analyst over at HYCM. Good to see you.
Yeah, hi Blake. Good to be with you again. Really looking forward to today. So I'm glad we got a date in the diary.
Yeah, me too. It's nice to get caught up, especially starting off into 2023, wrapping up a
Yeah.
very volatile 2022.
Yeah, I mean, I was listening to one of your last interviews, and one of the last things you said is you were just going off. I think it was with Dale, and you said, "Oh, I'm taking things one data point at a time at the end of 2022." And I was like, "Hey, snap! That's exactly where I am at. I'm looking, what's the next piece of the jigsaw puzzle? Trying to not take long, medium-term views when things were so uncertain." So yeah, we started 2023 right back where we ended 2022.
Well, isn't it interesting that like right now, based on where rates are at globally,
Yeah.
that now it's data point dependent almost on on all fronts,
Yeah.
almost globally. So I guess
Yeah.
with that being said, what's like your focal point as far as economic data goes? Where do you think we as traders should be focused on right now?
Yeah. Well, for me, I was really excited when we saw this shift because FX is back,
Yeah.
and economic data points are really red hot once again, and it's all about growth and inflation. So growth and inflation data are really key. We saw that reaction last Friday with the PMI print that came in very, very low. We had that big miss on the ISM services PMI print that disappointed markets. And if you remember, we saw a big uptick in equities and we saw the dollar start selling off. And there was that twin narrative going on. Is the Fed right in their December dot plot, no rate cuts 2023? Or is market pricing right? Two rate cuts this year when we come back from a terminal of 5%. And that PMI data point saw a strong reaction. We then had the CPI print on Thursday, which was on consensus and as expected, but still the dollar sold off. And now today, we had the University of Michigan consumer sentiment print. Current conditions really red hot, above market maximum expectations. Future expectations higher, and 5-year inflation expectations higher at 3% versus 2.9% expected. So each one of these data points is just providing a little short shove in the dollar. And that's really been helpful since the start of the year for my trading. And I've been focusing on growth data, inflation data, looking for out of consensus prints and taking short-term scalping opportunities. That's really what I've been focusing on.
Well, with the recent dollar weakness that we've seen, and we've seen the dollar index slump, down towards levels. Well, there's a really like key technical level that we're approaching.
Yeah.
My focus has been the dollar yen, just because the dollar yen's trading at its its new trend lows. We're well below 130 now. But
Yeah.
you're focused on a couple other or another yen pair, not the dollar yen. Can you tell us the reason why, and maybe show us the reason why?
Yeah, sure. I mean, am I able to share my
You are.
chart? Let me just
Let's do it.
my screen. Let me get this right. Okay. There we go.
There
So
we
you
go.
should be seeing my screen now.
Yeah, I can see on the Swiss National Bank.
Yeah, now, well, this was a article I wrote for you guys on what's happening for the SNB coming up.
Yeah.
Now, I'll just give you a little bit of context, so and that the picture will grow as why I'm looking to pair the yen with the Swiss franc. The Swiss National Bank, you can see that they've got high inflation just like everyone else, and the core is sort of ticking up at 2%. Headline moving lower, and that's the picture we're generally seeing around the world. Headline dropping sharply lower, core less sharply lower, and potentially moving higher like it is in Switzerland. But the Swiss franc index longs that we've been seeing, that came last year when the Swiss National Bank departed from their very low interest rate mandate. They had the lowest interest rates in the world, negative interest rate. They started hiking interest rates. Swiss franc gained rapidly. They've now moved all the way up to 1%. Now, what that means in terms of where the SMB are, is they're at a very, very interesting point of the cycle. So if you just take a look at their interest rate curve, what you'll see is that the terminal rate is expected for the SNB to be about 1.5, 1.6%. So they're currently at 1%. It's about a 50-50% chance whether they hike by 50 basis points or 25 basis points at their March meeting. So what this means is the SNB may be only one hike away from their terminal rate. So a lot of that Swiss franc strength we saw last year looks vulnerable to at least a retracement, if not a little bit of a deeper pullback. But if you compare that with the Bank of Japan, which is an entirely different position, and you can see this very clearly in the short-term interest rate market curve, you can see here that expectations are increasing that the Bank of Japan is going to have to exit its very low interest rate mandate and start hiking interest rates. So that's why we've been seeing the yen strength. That's what's been driving those dollar-yen shorts that have been so profitable and such a good move lower. But I just wanted to focus on the Swiss franc Japanese yen because that divergence could open up very nicely with the Swiss franc about to hit terminal and then pull lower, maybe the quickest of all the central banks. So in terms of a longer term position, and I'm talking 1 to 3 months, a deep pullback in the Swiss franc Japanese yen pair would make a lot of sense. Now, we know the Bank of Japan, next week they're meeting, January the 18th. There's rumors going around. Are they going to exit their ultra loose monetary policy? We saw that cap on the 0.5% of the 10-year JGBs being tested severely early on Thursday morning. So there's speculation, rife. But the yen, in my book, is very, very bought. And I've seen a lot of yen buying going on. And I don't want to get into the buying the yen short term myself, unless I could really manage the risk. So if I could see a nice pullback to either that 142 region or even better to that 145 region on the weekly chart of the Swiss franc Japanese yen, I would be very interested at selling from that region that I've got marked on the chart. Now, I know we're a long way away from that. But I do have a breakout alternative as well, which is if you can see this trend line going back from September 2021 on the weekly chart, if we get a break and close below that level, then I'd also consider a breakout and a retest of that region. If we break down and then move back to that level, could consider shorting from there. So I've got 3 options: shallower pullback to 142, preferred deeper pullback to 145, potential breakout retest about the 137 region on the Swiss franc Japanese yen. I just think the divergence could really open nicely. And if you look at the bond yield spread between the Swiss 10-year and the Japanese 10-year bond yield spread, you see that that is moving sharply lower. And of course, if the Bank of Japan do exit their ultra loose monetary policy and they do remove that cap that's currently on the JGBs, then this yield spread will move even lower and there'll be a nice scalping opportunity just to go short Swiss franc Japanese yen through that trend line. So that's sort of the things what I'm looking at short term and medium term. And I just think the Swiss franc is a nice currency to consider as an alternative to the dollar, particularly with the dollar. There's a lot of speculation. Will the Fed pull back? Will they hike rates even higher? And there's a lot of volatility going on just on speculation alone. Whereas the Swiss franc is a little bit more under the radar and a little bit more predictable what's happening with their inflation picture. Because when you look at the Swiss inflation levels, you can see how low it is. 2.8 for the headline and 2% for the core. So there's a lot less to go wrong with the outlook, and it allows the yen to hopefully just strengthen against the Swiss franc. So that's the logic. And obviously, from my book, it's the key area is always, where do I manage risk? So I'd rather get out, you know what I mean? I'd rather get out and get back in than enter at market with a 700-point stop, only to have 3 months of misery. You know what I mean? I'd eventually be right and say phew. or to be wrong and have this dilemma of I have to close this whopping losing trade, and I don't want any of that. I'm getting too old for that business, Blake. Do you know what I mean? I just want a nice, easy life.
I tell you, Giles, it's funny you say that. It doesn't matter how old you are. No one needs to deal with that.
No one needs to deal with that. You know what I mean? It's just don't do it.
100% know what you mean.
The macro picture,
right? No, I love it, and I love the fact that you're really focused on Swiss weakness. And if you haven't been paying attention via the FX, you had the Euro Swiss made a nice run this week. Swiss in general has been under pressure. So I think that's a great pair to focus on, Giles. Now,
yeah.
One of the other things that you mentioned before we started recording, that you're focused a little bit on some precious metals. Gold's been running and we're above 1900. Yeah. We're holding up pretty well. Silver's been lagging. The gold to silver ratio is kind of being a little wonky, but you're not looking at those typical precious metals. What are you looking at right now?
Well, I have been looking at gold, trying to get in, and I couldn't get in with conviction. So I had a little dalliance in gold at the end of last year, but I ditched that. But I tell you one trade I've just entered in today, which is platinum, and I'll just run through what's going on there with me. So the outlook for platinum tends to be very, very strong around this time of the year. If you look at the seasonals for platinum, you'll see that in the last 25 years, platinum has gained 20 times in the last 25 years between the 1st of Jan and the 19th of February. Has some outstanding gains, an average return of 7.23%. Now, the reason for that is that platinum purchases tend to be made by purchase managers at the start of each year. And purchase managers either don't know or they don't care about this seasonal pattern. They're just making their purchases.
We just need to buy it right now.
You just need to buy it, right?
Right.
It's like coats. You need to buy a coat in the winter. You need to buy ice cream in the summer. It's that same logic.
Sure.
So that's why platinum tends to gain sharply at the start of the year. Now, initially, I thought to myself, well, hang on. With all the concerns about the US falling into a recession, comments from the IMF that 2 out of the 3 big blocks in the world were going to fall into a recession in this year. Perhaps platinum purchases won't be so much. But oftentimes when businesses are making a projection and their purchases, they've put their orders in for 2023 already at the end of last year. So they're not going to respond to a slowing global growth in the same way that a consumer like you and I would respond to global growth. They move much, much more slowly. That's why the Fed likes to see the US consumer, to see how the US consumer is doing. We know that, right? So on top of that, if you look at the, let me show, here it is. If you look at the supply-demand imbalance for platinum, what you can see is that for this year, 2023, the supply-demand imbalance is expected to fall. So in other words, there's going to be more demand than there is supply. This is from the World Platinum Investment Council. And not only that, is it expected to be demand to outstrip supply this year, but also for 2024, 2025, and 2026. So you've got a scenario where demand's expected to outstrip supply at current estimates. Most factories, companies have made their orders for platinum already. So on this logic and this strong seasonal pattern that we had, it made sense to me to say, well, okay, I would expect platinum buyers to step in. And of course, what benefits if the dollar weakens? Precious metals, and if inflation goes high, then that's obviously a big boost to precious metals, gold, silver, platinum. It tends to lift all the boats. So the broader macroeconomic condition was pretty good. So then it was just a question of, well, where do you get in? So I saw around the start of the year, platinum was just sort of breaking out of this trend line, and I've traded it by a different instrument, just this retest of this trend line was where essentially I've got back in a different instrument. This is the platinum US dollar spot market. And essentially I've just entered in on a retest around this 1050 region, but I've entered in an ETF, so I'm using a different instrument to express it.
Yeah.
But that's essentially what I've done. Why, Blake? Because I can manage risk so easily. That near-term trend line, if price moves back within this area here, I can be suspicious of the move. With stops just running below 960, I've got that long-term 200 exponential moving average running underneath. I've got masses of support around that 1000, 1020 region. And if prices I should have a limited drawdown in theory, because this is the place to enter if you're going to be buying platinum. It's around this retest here technically.
And I would say that's probably about a 38% retracement of this last whole move higher, roughly.
Yeah.
I mean,
yeah, let's have a look. It looks like it.
Yeah, I mean,
yeah, there it
really
is. So,
close.
Fib makes sense. You got the 50 fib level in line with that trend line as well. So you've got a good fat support level that we're in. So in terms of the technicals, that's how I managed it technically. Even though price was rushing aside, I've had like a couple of weeks of patience, just waiting for the right move. And then we've got that pullback now. And I was just filled today, so I thought, well, this would be a good thing to chat through with Blake. So you can see the three parts that I've used: looking at the seasonals, looking at the fundamentals, and then managing risk with the technicals. That's the way I like to trade. And emergency stops underneath that 960. But if I start faffing around this area, I can either use the first swing point to manage risk to get it a bit tighter, or I can just see if the macroeconomic condition has changed. But either way, I've got my emergency stop plus some decent tech to manage risk. So it's a fairly relaxed trade to be in.
Giles, I'll tell you what, I really enjoy your analysis, and I'm glad that it's been way too long, but I'm glad we got to sit down and do this together. And I love you bringing ideas that I haven't heard from. Everybody's like, oh, I'm just bullish gold. I mean, you might be bullish gold too, but you're bringing us some great ideas. So as a trader, what's the best way for me to follow your work?
The best way to follow my work is to come to Traders Summit and to follow along the post there. I do a post every single day at Traders Summit. And, it's I put a lot of effort and a lot of thought into the material. And one thing was that I don't have time to follow up a lot of the material. So once I put it out there, it's gone. But if you just spend time looking at the material and thinking about it, you know what I mean? I'm chucking out a lot of gems, you know what I mean?
You are. And you know, what's your Twitter handle? Just so everybody knows, because I love following you on Twitter, and you get into some great conversations there as well.
Yeah, I am. But unfortunately, HYCM, I'm no longer allowed, and I should have said this, I'm not allowed to advertise my Twitter handle in interviews.
Oh, well, you guys will
I'm
be
sorry,
able to find them.
I should have
I'll advertise it for you.
Yeah,
you'll be able to find them. Find us on Trader Summit. Hey, Giles, if you guys and gals loved what you heard here, make sure you give Giles a big thumbs up and jump in the comments below, especially if you have any comments regarding the whether you're talking about platinum, Swiss yen, Swiss in general. Giles, I want to say thank you so much for spending your time with us today here on our community.
Blake, thank you very much for having me. I was really looking forward to today, and I'm really glad the things I've been able to share, and just thank you very much for hosting me. And it's such a pleasure to talk with you. It's so easy. I'm sorry if I spoke a little bit too much, but I tend to get overexcited, especially when it comes to talking about the market.
I love overexcitement about the market. There's nothing wrong with that. Never apologize. Giles, I look forward to our next conversation, and I hope you have a great weekend.
Thanks, Blake. Same to you, and Happy New Year to you.
Happy New Year. Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.